Welcome back. Now, everyone wants to make money in real estate. And if you know the rules, well, that's certainly doable. Now, it certainly helps if you buy real estate at the right price. And in this episode, I'm going to give you a handful of ideas about making money before we finish. So stay with it. I'll tell you, new entrepreneurs, that they can make money when you buy the real estate, not when you sell. So let me say that again. I try to tell newcomers and entrepreneurs that you make your money when you buy the real estate, and you collect your money and go to the bank when you sell the real estate. Now, the statement is somewhat contrary to what other people teach. They're basically going to teach you buy low and then sell high. I'm going to say buy it low and then get rid of it, get it sold, and make a small profit and move on. So for the past 30 years, I've been involved with an alternative side of the real estate business. You could call it a subsection of the real estate business. I call it tax deeds and tax liens. And I want to talk to you a little bit about that and show you how to buy these properties for absolutely pennies on the dollar. Now, the buying part is easy. Anybody can buy these properties. How do I say that? Well, there's over 3,000 counties plus 1,400 municipalities in the United States. All of them sell tax defaulted properties at public auctions. So there's going to be plenty of places to buy. The challenge people have is actually doing the selling. So the bids at the auctions, they start at the delinquent back taxes, which could easily be 10 cents, 20 cents, 30 cents on the dollar. Plus, the county has been authorized by the legislature that when the county confiscates the property, they can eliminate the mortgage. That means the treasurer will cancel, wipe out the mortgage, so there's no mortgage on the property or on the deed or trust loan. So that means you're getting a property free from those loans. That all translates to investors being able to buy property for 60, 70, and 80% below the market price. Now, if you can start out with 60, 70, or 80% below the market price, well, you got a good chance of making yourself a lot of money on the margin. Now, I'm fond of saying to people, anybody can buy real estate. It takes a genius to sell real estate. And quite frankly, it does. If people are going to have trouble, they're going to have trouble with the selling of the property. Now, what do I mean by all that? Well, it's easy to buy, even if it's a bargain. Why? Because when you're buying, you're excited, you really want to be into it, and you see that you're getting properties for 10 or 20 cents on the dollar. Selling a property requires a whole new mindset. Now, what is that mindset? We have to be a marketer. You have to then understand, what are you going to do about pricing? Are you going to try and get the highest price possible, or do you want to get rid of it? What are you going to do about advertising and announcing the product and the property to the rest of the world? All of that means that you've got to start thinking about selling and marketing. This is a skill, and it's the most challenging part of being in the real estate business. More people have trouble with selling than anything else. So starting the right way means starting by pricing the property properly. Now, how are you going to price it properly? You're going to get your pricing under the competition and less than the tax assessed value. All right, so I spend my time teaching people, buy at the auction for 10, 20 cents on the dollar, and don't try to get retail. Try to get something under retail. In other words, if you bought a $100,000 property and you bought it for $30,000, why not sell it for $60,000? If you bought it for $30 and you sell it for $60, some people are going to say, Ted, I don't want to leave that money on the table. Well, leave it on the table, make the thing happen, and make it happen quickly. Why? Because there's always going to be another auction and there'll be other properties. So the point is, buy low and sell low, and that's contrary to any other real estate course. They're going to teach you to buy it low and sell it high. Or buy it low, fix it up, and sell it high. I can assure you that you want to have an advantage in the marketplace by selling it lower and less than the market value. So selling, it means you have to go through a long list of multiple announcements. Now, where are you going to do those announcements? Let's talk about it for just a second. First of all, there's Craigslist, there's eBay, there's a multiple listing service, there's Zillow, there's Trulia, there's signs all over the property. You can advertise in the newspaper. You can put it on television. You can use all the media possible, and there's literally dozens of electronic sites. You need to be on all of those sites, and you need to be letting the world know that you have a bargain property And if you tell them that you're going to use an installment sale, you'll get even more people looking at your property. All right, now the treasurer makes the rules and makes the low selling price at the auction. Now, why did they make those selling prices low at the auction? Because they don't want the property. These properties are don't wanters for the people that let them go to auction and for the county. The county's got all the property you want. What do you mean they got all? They've got the office buildings, they've got the roads, they've got the parks, they've got the schools. They don't want any more property. They just want to get rid of these properties and get them off of the default list and over onto the tax roll where the people will be paying taxes. Now, the selling process needs to create an attraction to the property. How do you create an attraction to your property? First of all, pricing is always number one. Bargain hunters are always looking for a bargain. So if it had a $100,000 assessed value and you were trying to get $65,000, I can tell you right now, you're probably going to get a lot of activity right away. Why? Because you're way below the competition and people will come and take a look. So bargain hunters, as well as sophisticated investors, they want bargains first of all. What do they want secondly? Secondly, they want to know what the financial deal is. Is the down payment small or is the down payment big? Are you going to do financing or do they have to go to the bank? Now, if you're going to provide financing, well, that's going to make a big difference. Why? Because there's a whole other market out there that have low FICO scores. What does that mean? They're credit challenged people. Maybe they didn't make all their payments before. Maybe they had a foreclosure. Maybe they had a bankruptcy. They don't have enough money. They have good jobs, whatever. They might not be able to go to the bank and get a loan. So if they go to the bank and try to get a loan and they got a poor or low FICO score, that FICO score is going to make a big difference. If they've got a low one, the bank is going to reject them. Now, how do you like being rejected? Nobody likes being rejected. So if they're rejected at the banks, there's a good chance they'll notice your property because you're attracting people by lower than normal price and the fact that you might do seller financing. If you do seller financing, it might only be a low down payment. People want to get in and they want to get started. So in today's episode, I'm answering the question, how to set up seller financing. It's not difficult. You can get the documentation from the local title company. You can get an attorney to help you with the documentation. They would have it. And then you can also get a real estate broker that would help you with all that. All right, the point is, the people can go to the bank and they can get a low interest loan because the bank loans are so low. But they can't get those loans unless they meet all the standard criteria. What is the standard criteria? Good FICO score, stable job, high earnings. All right, a lot of buyers don't have all those things. They might have a good job, they might have good earnings. However, they don't have a good FICO score because maybe they didn't pay a credit card, or maybe they didn't pay a utility bill, or maybe they haven't paid a hospital bill. Something's got their credit upside down. So if they got a poor FICO score, they're going to get kicked out. Now, the bank has high standards. The high standards meaning you have to fit within the guidelines that they have already produced. If you don't fit in those guidelines, there's no way they're going to let you borrow any money. If they won't let you borrow money, it's because your track record isn't good. If your track record isn't good, you're going to have to get financing help from somebody. All right, so your ads, whether it's on Trulia or whether it's on Facebook or whether it's on Zillow or any one of the sites, needs to let people know that you have seller financing available. That's how the deal works. If you let people know, you're going to be able to do it. All right, now, when you're selling property, if you can sell with a low down payment, a lot of people are interested in that property. A lot. Why? Because a lot of these people don't have those good credit scores, and they're not going to worry about the actual price of the property, and they're not going to worry about the interest. Now, why don't they worry about the interest? Because that's a tax-deductible item, number one. Number two, if they can make a low down payment, and there's appreciation in the market or inflation in the market, then they'll double their money quickly. For example, $10,000 down on a $100,000 house. Well, what if the price goes up 10% this year? They just made 100% on their money. And we'll go back and explain all that now, but you get the point. Small down payments and just a slight increase in value means they double their money. So in the business of tax liens and tax deeds, well, financing becomes important. So buyers quickly learn that if they're going to sell the property, they have to attract clients. How are they going to do that? They're going to do that by announcing it in a lot of places. They're going to announce it where they have a lower than normal sales price, and they're going to advertise seller financing available. All right. So how do you talk to clients about seller finance? You don't have to talk to them. All you have to do is put it on your signs, put it in all your advertising, and they will come to you. Why? Because probably 20, maybe 25% of the market does not have good FICO scores, and they can't get financing. Actually, the ability to extend financing to people, in other words, make a 10-year loan where they couldn't get a loan at all, is very appealing. Very appealing. So they're not going to worry too much about the payment. They're not going to worry about the total selling price. What they really care about is what is the financing deal. In other words, what do they have to pay every month? So buyers with low FICO scores, they've mismanaged something. I don't know what they did, but they've been irresponsible somewhere along the line. So what happens with those people? They're rejected. If they're rejected, you want to get those people that are rejected. All right, that's a whole segment of the market. It's not going away. It'll always be there. Always going to be there. All of the interest that they pay on that loan is tax deductible. All right, so here's how you accelerate the sale. Number one, pricing. Number two, financing. All right, so how do you let people know about this? You have to do something about marketing the property, not just trying to sell it, saying I want to sell it. You're going to have to put signs on the property. You're going to have to use Zillow. How about the MLS? You want to use the MLS system if you can. All right, you also want to use Trulia. You want to use every possible site you can. But all the electronic sites, from Craigslist all the way through, you definitely want to use those. So my name is Ted Thomas, and that's the end of this particular episode. But right below me is a free gift for you. But I have two cautionary words before you go. Number one, if you're going to buy a property at auction, you want to have boots on the ground and seen the property. Don't buy a property you haven't seen. What if they had a hurricane? What if there was a fire? What if it was next to a chicken farm? Nobody's going to want to live next to a chicken farm in the summer months. I can assure you of that. All right, now number two, what you want to learn there is that you don't want to buy a property unless you already have an exit strategy for that property. You don't want to go to the auction and keep bidding up so that you win the auction. You want to know what your exit strategy is so that you buy it low so that you can sell it low. Right below me is a free gift. I'm Ted Thomas.